Hello and welcome to the next section on depreciation in Chapter 7. Okay, this next section is 7-5 on page 713. All right, and it's called the election to expense. Okay, now this is not depreciation. All right, depreciation is the allocation of an asset over its useful life. The election to expense is when you write off the entire amount of the asset in 1 year. All right, it's just like it sounds. You're taking an expense instead of a prorated depreciation deduction. Okay, so what qualifies for Section 179? Well, if you look at the bottom of page 713, all right, in the very last paragraph, all right, if you read through it, it says that Section 179, election to expense, applies to both new and used property. All right, okay, so for example, if you buy a used lawnmower, okay, even though it's not brand new, it's new to you. Okay, and so the IRS says that you can be allowed to write off 100% of that lawnmower in 1 year if you qualify. All right, the property has to be personal property. It cannot be real estate, nor can it be anything in the real estate. Okay, I do a lot of tax returns every year that involve rental properties. And, you know, I get people all the time that say, well, okay, I installed carpeting in my home. Can I write that off in 1 year? The answer is no. Okay, the real estate or anything inside the real estate is considered to be real estate property. And that cannot be written off as Section 179 property. Okay? Okay, what are the limitations do you have? Okay, number one, all right, if we go to page 715 and we look at form 4562, okay, all right, there is a, if you look at line 11, okay, it says business, all right, income limitation, all right, so you can only expense up to the amount of business income that you have prior to the Section 179 expense deduction. Okay, so let's say, for example, you go through all of your income and expenses and you have $25,000 of income left. Okay, and you have $30,000 of assets that you placed in service that year, which qualify for Section 179. Okay, you can only write off $25,000 of that $30,000. Okay, as a Section 179 expense deduction. All right, that would drop your business income down to zero. Then the remaining $5,000 of your cost basis you could depreciate over however many years you determined was its class life, which would generate a loss for you. Okay, so depreciation can cause a loss, but Section 179 cannot. All you can do the best there is break even. Okay, all right. So there are also limitations on how much you can expense in 1 year. In 2017, the limitation was $510,000 of qualified assets. Now that's more than most of us will probably purchase, you know, in 1 year, but for extremely large businesses, $510,000 is a drop in a bucket. Okay, all right. So you have a limitation of business income. You have a limitation of $510,000 of personal property assets purchased in 1 year. Okay, and then if you keep reading on page 714, it'll tell you that there is a threshold. So once you purchase more than $2,540,000, okay, all right, then you can no longer expense under Section 179. Okay, all right. So again, you know, the most of the time the software will do this for you. Okay, when you enter an asset into a depreciation worksheet, it'll ask you, do you want to Section 179 this asset? Okay, now a lot of tax software, when you fill out a depreciation worksheet, it'll ask you what kind of an asset it is. Is it 3-year property, 5-year property, 7-year property? Is it personal? Is it real? And when you answer these questions, it'll automatically determine whether or not you would qualify to take Section 179 expense deduction. And then you would have one more checkbox that says, do you want to do this? If you say yes, it'll automatically make the Section 179 deduction for you. If you say no, then it won't. Now here's something to keep in mind also about depreciation. All right, if you're dealing with a startup business, you probably don't want to take Section 179 expenses and or bonus depreciation, because it's assumed that businesses will probably have losses in their early years. All right, so they don't need to take a Section 179 expense deduction because they're already in the hole. All right, leave that depreciation for future years when they can use those deductions against their income as it rises over the years. Okay, all right, so that takes care of our section here on Section 179. All right, the next thing we will talk about is listed property.